Hello, and welcome to Money Matters TV and our segment Growth Stories, where we hear from entrepreneurs and advisors who share secrets and advice on what business owners need to know to grow. I'm your host, Mike Verrill, Vice President with the Sharpe Financial Group. We're an integrated financial management firm providing a unified approach to business advisory, accounting and tax, wealth management, family office, capital solutions under one roof to help business owners and their families achieve extraordinary things. We, from time to time, issues involving life sciences, technology, and healthcare companies may be discussed on the show. Those discussions are not and should not be viewed as financial advice. Moreover, since the show is pre-recorded and shown at a later date, some of that advice may no longer be relevant. You should always seek advice from your financial advisor before entering into any financial transaction. I'm joined today by my co-host, Rija Beares, Vice President with CBRE, a global real estate consulting firm. Rija heads up the technology and media practices in Philadelphia, where she helps high-growth technology companies develop real estate strategies to support their business objectives. She also serves on the program and outreach committees for Tech Girls, an organization that helps expose middle school-age girls to careers in technology. Rija, thanks for joining me for Growth Stories.
I'm glad to be here. Thanks, Mike.
So Rija, through past episodes, we've interviewed many entrepreneurs and equally as many interesting backgrounds.
Absolutely.
Yeah, and certainly a different path to success for each and every one of them, it seems. Today on Growth Stories, I'd like to alter our path a little bit and see what we can do from there.
That sounds great.
Yeah, so what I'd like to do is, based on some feedback I've gotten from other viewers that get to provide their comments from the show, that they'd like to hear more about our backgrounds and also maybe share some interesting moments of guests we've had and things like that, discussions we've had with some entrepreneurs. But before I do that, we have a guest from one of our viewers.
Okay.
Thomas Rock from Philadelphia would like to know, what does the commercial market look like for 2020?
Sure.
And as we usually do on the show, I'll take a real estate perspective on that because that's a broad question, but I'll focus on real estate since we have you here as the expert. And so can you give us a 2020 outlook? What are you guys seeing? What are you preparing for?
Sure. This is obviously a theme right now. January, new decade.
Yep.
Everyone wants to know what's going on in 2020. So I would say fundamentals are shifting a little bit. But the outlook for 2020 from the real estate perspective is pretty good. We've seen employment growth slow a little bit. We've seen negative absorption, and absorption is just how in the commercial markets we measure space taken.
Okay.
So those two things are indicators that there's a slowdown. But I think that from the corporate perspective, it's more this densification. Companies, especially publicly traded, still have pressure to perform quarter to quarter. How they can do that is to downsize and consolidate.
Right.
So that's still going on. But when you look at the mid-cap companies, funding is still there. They're taking on new funding, and they are growing. I have to say, especially in healthcare and life sciences.
Okay, so some of those sectors are really continuing to bolster the positive indicators in the real estate market for the year to come.
That's right.
Good, and real estate as a lagging indicator, so hopefully positive for real estate means maybe 18 to 24 months more of positive uptick in the economy.
Yeah, so, and I think that sounds about right.
Yeah, we'll keep an eye on it. Lots of other influences going on right now, so we'll see how that all plays out.
Yes.
It's always great to hear from our viewers. To submit for a future show, here's how to send your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
So this is the 5th year that we've been using Money Matters TV and our segment Growth Stories to hear from entrepreneurs, interesting insights, and stories, also from advisors who are working with growth companies. And you've been my co-host the longest, right, through that time, and so must be doing something right.
Yeah, something.
But so, we talk about in the intro, you work as a consultant for CBRE, real estate consultant, but, as our viewers indicated, like to hear more about their background. So can you take a step back? Give us, how did you get into that industry? What were you doing at the time when you had the opportunity?
Sure. Interestingly enough, I really wanted to go into technology. And I had started programming from a young age. And when I first started out in college, I started going down the engineering path and, figured that I would go that path and figure out what would come from there. And about midway through that, I decided to pivot more into a business role.
Okay.
So I finished up my education really in business and still wanted to work in the technology sector, but just from the business perspective. So I got out in the middle of the dot-com, just total destruction era,
Meltdown,
right?
yeah.
It was 2001.
Right.
And I took a job with a technology company in Bethesda, Maryland called CoStar Group.
Oh, interesting. I know that
And
company.
CoStar Group provides a private multiple list service for commercial real estate. At the time, we did not, the web service wasn't around. So what we were doing is we were entering data. I was an analyst there. And we would burn everything to the CD-ROMs and mail them out
Right.
to
Now
the
we're dating
clients.
ourselves.
That's right. That's right. And so I spent some time there, and I got to learn the ABCs of real estate. And part of my job was to talk to a lot of brokers.
Okay.
And I quickly realized that commercial real estate was really of interest to me, and decided to make the move. So I started looking for research analyst positions, figuring that was my easiest entree into the commercial real estate world.
Based on what you'd already been doing as well.
Correct, yeah. And I landed a role with Insignia ESG
Okay.
in Philadelphia, and Insignia was the predecessor company to CBRE.
Sure, I remember
So,
when they
yeah.
acquired Insignia, absolutely.
Yeah, exactly. So I joined Insignia ESG in 2002. And then we were acquired by CBRE in 2003, and I have grown within the company and sort of changed roles from there, and am at the same company as I have been for coming up on, I guess, 18, 19 years.
Wow.
Yeah.
So what is it that energizes you about real estate, or what were some of the things that said, this is what I really like to do?
Sure. I think when I first started out, a lot of it was just the freedom that I saw to be accountable to yourself.
Right.
And as I started to gather my own clients, it just became being a part of their success stories. There's just nothing like meeting someone, learning their industry, and then getting to help them grow.
Right.
So that was really alluring. And then the other thing is I'm really a constant student. So I get to live vicariously through all these industries.
Sure.
And, sometimes there's a lot of learning curve to understand what my clients are going through, and that's been really interesting to me as well.
Yeah, professional services, those roles allow you to take on kind of a persona of your client and
It's
really
true.
live in their shoes and understand their business, like you said. It's interesting.
Absolutely. How about you, Mike? So we met really when you were in the commercial real estate industry.
Years ago when I spent time in the commercial real estate
That's
industry. I got into that through, I was in a technology sales role, and technology sales at that time was becoming much more consultative. And so just an extension of that, I saw real estate as an opportunity to be much more consultative with clients and more strategic, help them, as we say, matching that strategy of the real estate so that they can help their business grow, right? So that was one of the things that interested me there. That path took me, I had a financial services or financial degree from Temple University here in Philadelphia. And I kind of always thought I would go that route and got involved in the real estate and some other things, but also got involved in financial services, and then I started working with accounting firms. I had a tax background as well with some co-ops I'd done here at a local bank in Philadelphia. And so I got involved in the accounting world, mostly on a business development side. But interestingly enough, I saw kind of two sides to businesses, right? I saw the business owner side where they were trying to professionalize the business. And then we worked a lot with private equity firms who were trying to buy businesses and invest in businesses. And there was definitely a disconnect. Business owners typically run their businesses for their own profit, right? It's a private business to support their family and their wealth creation. But they don't always think of that business or the mindset that, hey, somebody might want to buy this someday.
Right, the exit.
And so when I saw that disconnect, I realized that the Sharpe Financial Group, which was kind of morphing into this integrated firm, was touching a little bit of every area of that aspect of the private business owner. And so I really looked at it as a unique opportunity to do something, quite frankly, that I hadn't seen in the marketplace, which was this firm that serves kind of all the needs of the private business owner, from the business planning side to their individual wealth side, right? And then helping them sell the business. Like, how do you go through that process? And then and managing the results on the back end. So that's kind of what led me to Sharpe. What gets me interested is these are life-changing conversations. We have a business owner we're working with right now. When we met them, he thought his business was worth single-digit millions of dollars, and we potentially think the business could be worth mid-range double digits.
Wow.
And he's got family in the business, and so it's a completely life-changing conversation with him. If we can take him to a place where he can create significant legacy wealth from the business, it's a totally different mindset about your life and what you've accomplished. So it's really rewarding because a lot of times these business owners, they're very smart, they run great businesses, but they haven't had the experience in how you transition from that, all of their assets tied up in that closely held business into, I'm sorry, I'm drawing a blank. Their portfolio. Yeah, like I'm drawing a blank on the word. But,
no,
diversifying. Thank you.
Yeah.
Thank you. Late brain snap there. The diversifying their portfolio, right? So when you think about a business owner with 50 to 80, sometimes 100% of their future wealth, retirement wealth tied up in that business.
That's right.
It's like, how do you go through the process?
Mitigate some of the risk.
And diversify that into other asset classes and the things that are smart to maintain and reduce the risk and help grow and maintain your wealth. So.
And when you have that kind of life cycle support from an advisor, it seems to me that you could focus even more on your business because you don't have those outside worries. You have someone that's working with you to mitigate that.
They always say it's lonely at the top, right? But somebody running a privately held business most likely doesn't have an outside advisory board. It's not like they have other people in their company to go to. There's some peer groups that they get involved with, but somebody really to turn to and talk about what's going on in the business and how do they fix some of the things that are keeping them up at night, that result of that is immeasurable. It really is. I mean, we become, I think, sometimes the psychiatrist with the business owner on the couch, helping them talk through some of these things. We just had a business owner recently told us one of the goals in 2020 was to transition the rest of the operational focus of the business over to his son. That's a huge step for a business owner to take. Necessary to maximize business value if you're ever going to look to exit. But that's a huge personal decision a business owner makes. So being able to help them through those kinds of things is very rewarding. And then the accounting and tax piece is like the blocking and tackling. But getting that in order is really important.
It's the real people conversations that are so interesting.
And I'm sure you see that.
Absolutely.
Do you find yourself working more with public companies, private companies? You have a nice mix. What do you typically see?
Yeah, I would say it is a good mix. I have a lot of publicly traded companies, so when we're evaluating things from that perspective, there's a lot of gating that we're going through to making sure that there's the buy-in along the way,
Right.
and that we're creating a process that everyone can get on board with.
Yeah, very risk reduced.
Exactly. That's
yeah.
exactly what we're doing, and we're trying to get to basically 95% costing models so that these companies can go to the board.
Right.
And then further, we're looking from the accounting standpoint what the implications are.
Sure.
And if it
sure.
makes sense. And then from the private sector and really the PE-backed world, those companies operate certainly at a different speed. A lot of times they're so high growth, they are just moving as fast as you can possibly move.
Right,
And
right.
That's a different type of agility, right? There's a lot of cost that goes into those type of spaces, but you're trying to also minimize and create flexibility
Right,
for those
right.
companies.
It's interesting you say that, because one of the things we talk about with our clients is so many, it's not only the public companies that they're competing with, but so many private companies that maybe they were competing with who are also family owned are now private equity backed. And those companies are run at a much more highly sophisticated level, more process, more discipline,
Yes.
more information.
Absolutely.
And that's who you're competing with. So you can't just be this, run it by your gut and kind of
No.
hope it works out. There's very intense competition in almost every sector. I mean, we see private equity companies in almost every sector. And we see more now strategically backed. So it's not just private equity, it's a company out there that's privately run, but it's backed by private equity, so they got the additional capital
Yes.
to fund growth and everything. So that's who private business owners are competing with.
Yeah.
So you got to step up your game if you're going to continue to stay
You
on
do.
top of and be relevant in your industry.
You absolutely do. And, when I first started in the business, people would take space, and really, to some extent, it was a blind lease signing. And the construction was very vanilla. And now the consumers are so much more sophisticated across the board that you're not telling them that they need to understand what the budget is. They're
Right.
telling you that they need those numbers.
Right. Right.
Whereas before, it was educating them on the fact that there could be hidden costs.
Yeah, yeah. And now
So,
they realize this.
Now they're very much
Yeah,
aware of
yeah.
that. And
See, I was there in those days when
Yeah,
you had to explain to them that just because you're paying X amount of dollars in this building and X amount of dollars in that building, it's not apples to apples.
it's not apples to apples.
Yeah,
Exactly. That's what we
yeah.
had to explain constantly.
Right. Whether
And
there's-
now the construction costs are such that usually tenant improvement packages are not covering all those costs.
Yeah,
So it's
yeah.
it's a big check
right.
to strike.
Because there's such a boom in the economy with all the construction going
That's
on.
right.
So obviously demand is there, and
Mm-hmm.
and that becomes a big expense in a new lease, is the build out of the office space, right?
Most definitely.
Yeah,
Yeah,
So it's
that-
good to have someone like you kind of guiding them through that.
Yes,
'cause
and
those are
telling them-
expensive mistakes.
Right, when counterintuitively telling them when not to make the move.
Yeah, yeah. Well, that's interesting. So obviously we talk to high growth entrepreneurs mostly on this show. What are some of the things that when companies are looking to grow or even maintain a profitable position in the market, from a real estate standpoint, what mistakes have you seen, or there's things that you make sure that somebody's doing every time? Like what does
Sure.
that checklist look like?
The number one consideration right now is talent.
Mm-hmm.
So where do you need to be to get that talent?
Right.
And that is, if you make a wrong move there,
Mm-hmm.
and we're not talking about just existing employees, although retention is a huge discussion right now.
Right.
But we're also talking about attracting new talent. And the millennial generation, it's almost, we talk about it ad nauseum, but they want the amenities.
Right.
They want the company culture. So you need to be able to create that. And then the second item is those construction costs.
Mm-hmm.
Just being able to budget to
Right.
get the type of space that attracts and keeps the employees.
Back in the tech day when you talked about the boom tech time, early 2000s, companies were just taking down as much space as they could possibly sign a lease for. Do you still see that, or are companies more thoughtful in how they build out a space to potentially expand for future growth?
Sure. I think it varies. If you go outside of this market, the take space as quickly as you possibly can is very real.
Okay.
think of San Francisco.
So the high
Boston,
growth
the high
markets.
tech growth markets.
Okay.
It's space is taken at an incredible pace.
Right.
When you're talking about a Philadelphia that's more of a slow, considerate growth, I would say that sometimes there is a need to take down space quickly, but it's balancing the cost. So you're not just going to take a space and then build it out at any cost.
Right.
We'll go through the process and we'll really evaluate whether or not you should be in a co-working type space, or if we can find a sublease, or if you just really are at the point in your life cycle trajectory where you need to have your own committed space and build it out to meet your needs.
Right. So some of those flexibility with I know the whole WeWork meltdown, but that part of the lure was creating the flexibility in how you take space.
That's right.
So even though WeWork is dealing with their own issues, you still see co-working space as a very integral part of that whole real estate puzzle.
Absolutely. And CBRE has, there are a number of different firms that if a client comes to us and is looking for a more flexible model that we're evaluating. So HANA is one of them.
Okay.
WeWork, they still have an enterprise product. And then IWG, the Regis platform, they also have an enterprise model. And there are more. Those are just naming kind of the three big ones right now. But that's another thing. Those are situations where if you're doing an enterprise model, not just a co-work as is space, you want an advisor really comparing the different options to make sure that you have the right solution.
And I'm sure those are full detailed packages too.
They're
including multiple cities and the amenities you get.
Absolutely,
and all of that, you do it a la carte, it could end up being very costly.
Well, and that's the trade-off. Those enterprise models that the co-working spaces are providing, they are costly. You pay for flexibility because, and this is a broad brush stroke, but generally speaking, any improvements are just amortized over the shorter term.
Sure.
So you pay up, but you may be able to get your culture built out for a 2-year term.
Right.
So it just
so that's
depends.
huge, because I can remember, back in when the tech meltdown happened in 2003, 4, 5, you were spending time subleasing big chunks of space because companies had 3, 5, 10-year leases with lots of term remaining. Yeah, so that's troublesome.
Yeah.
For us, from a growth standpoint, we see timing is everything. I'm going to say timing is everything. But taking time to plan is everything. If you're really going to try to execute on a growth strategy, you really need to do the planning. I think a lot of times what companies realize is, you do your budget for the following year, and not everybody does the budget, so we help them get that budgeting discipline in place, at least a budgeting and forecasting discipline. But managing the cash flow, I don't think people often miscalculate how much it's going to take, the working capital that's going to take to fund that growth. So planning your cash flow is very important. So first of all, having good, clean financial reporting, which is something we spend a lot of time helping clients with. Big public companies, they have tons of people that do that for them. They have their accounting firm and experts internally advising on all the new rules and regulations for things like revenue recognition, things like that. Small private companies don't have that. So you got to bring that discipline to them, and then managing that cash flow. And then I would say the second thing from a growth standpoint is helping them balance that right time to take additional capital. Hopefully your business is good and your balance sheet's strong enough where you can take some additional debt to help fund the growth of the business, because you won't want to give up some equity. But there are times when, if the growth is going to be significant, an equity trade-off might not be too bad, right?
Sure.
A smaller piece of a much larger pie is still can be outvalue a larger piece of a smaller pie.
Yeah, that makes sense.
So if you do want to look at funding sources to share equity, you can do that. But we spend a lot of time educating our clients and helping them through that. That's a big piece of what we do, because everybody wants to grow, but you've got to make investments to grow.
Yeah.
And that part gets lost sometimes. And managing, like I said, managing the cash through that growth.
Yeah.
That's where companies get in trouble.
Yeah.
Most companies don't go out of business because they've got a poor product or poor service, or there aren't clients that want what they do. it's because they haven't managed their cash properly and they can't afford to keep pace with the demand in the marketplace, which hopefully you can avoid. Those companies that are successful and grow, they
do
avoid that, and they're really thoughtful about it.
That makes sense.
Yeah.
So when you're advising these companies, just in your typical client base, do you see most of those business owners looking to own or to lease for their companies?
So, and I guess part of this is just from my real estate background and experience. I look at the growth trajectory of the business, the predictability of it, the nature of what they do, where they do it. So if you are a company that is expanding geographically across a broad region, say you're going to be your local player and you're going to be regional or national, does it really make sense to build out all your physical infrastructure in one location, right? And that's great. You have a bunch of people here and you think you can buy a building, but if it's going to end up having to be in multiple locations, maybe you should look at a rental. So I would say it varies. We do have some business owners that like to own the real estate.
Sure.
There's some situations where that becomes helpful when you're going for financing. Maybe you got extensive growth in the business and the actual principles of the financials of the business can't support the funding you need, the debt, the credit you need, and you can use the real estate as a piece to collateralize some of that.
That makes sense.
So sometimes that can be helpful. But I typically say to somebody, if you can't project what your physical plant needs are going to be outside of 5 years, then probably owning isn't a good, it looks like it's 7 to 10 years. And like I said, I'm kind of using my rule of thumb from my old real estate days. Say 7 to 10 years. If you know what your growth plan is going to look like, then it might make sense to buy a building, right? Because it can be a great tax advantage for business owners too.
To lease back to the company.
It's not a clear and cut answer. It, as most things, it depends on the scenario. It depends on the goals of the business owner. It depends on where they're going with the business. So,
and we're having similar conversations. It's sort of where our two industries are merging. Where we're backing a lot of times people just point blank think owning is better.
Right.
But when you start to have those growth conversations, certainly things can change. And then the other component of that cash management is people don't understand how expensive it is to own
and maintain a building.
Exactly.
And do you really want to be in the real estate business and whatever else your business is?
If you have
really
other tenants that you have to manage,
Yeah.
that becomes difficult sometimes.
So, I know one of the things we always do is kind of help our reader or our viewers with some suggestions on book readings. Usually we get it from our guests, but I thought we could share. Is there anything particular that you're reading right now that's of interest?
I would say on my backlist, and I've just started it. It's called "Tell Me More" by Kelly Corrigan, and I believe Kelly's a local Philadelphia author. I don't know if she lives here now, but I think her roots are from here. And it's just almost 12 essays about phrases that you really need as part of your vocabulary.
Oh, interesting. To be successful.
So far, so good.
Good.
I'll have to report back on how it ends.
Yeah, great. I'm
How
reading
about
a
you?
great book by Annie Duke. She was a doctoral student at Penn here locally. Successful poker player.
That's right.
And thinking in bets. It's incredible. It really helps you evaluate your own biases that you use to make decisions. So
that's really neat.
Yeah.
Have to put that on the list.
This has been fun, Rhea.
This
Time
has
flies.
been, yes.
Thank you for joining us for Growth Stories. And the guest on the next show will be Ken Milner of Kraut Harris, attorney Ken Milner. As a reminder, you can download the podcast from iTunes, Stitcher, as well as see our programs on the YouTube channel Money Matters TV. Thank you for joining us for Growth Stories.